Good afternoon. Unfortunately, not a very good afternoon. I don't know if this is presuming or nervousness around the SEBI decision potentially coming out in the evening or something else. But there is a degree of red that we haven't quite been used to in the recent past. So there is a bit of corrective move that has taken place in the markets today. Nothing alarming, just about 1.5%, just that we're not used to seeing this. By the way, it's not just India. If you look at the other markets, Europe will come up on your screen. That is looked wobbly as well, 1.5% for the CAC, FTSE down about 0.5%, DAX down about 0.5%. So Europe too has a bit of pain. Market breadth is weak today, mid caps and small caps also correcting. Let's get the heat map up on the screen and show you what's moving and what's not. This is of course the mid caps, which is also down 0.5%. But bring up the heat map, a fair degree of red, and look at the stocks that have gotten beaten down. Reliance Industries, when Reliance is down 3.5%, you know that the index might have something wrong because this is a heavy weight. But autos have come off ahead of the monthly sales data, which is expected to be weak. A clutch of auto names, even two-wheelers have come off, and naturally four-wheelers have come off. Remember, because of the inventory and the Pitru Paksh, 15 days of people not buying too many vehicles like they normally do, September, or the month where this is happening, usually tends to be a weaker month. So that's the nature of names. I mean, you look at even Maruti out here is down about 1.5%. Tata Motors is down 2%. So there has been weakness across the board. Gaining, very few stocks up and about. Metals effectively, but even there, Tamanna, while JSW Steel is still up about 2.5%, some of the others are just about holding up 1%. Though on a market like this, to have a 1.5% return is also probably not bad.
You know, the only thing that is concerning, Niraj, is the sharpness with which we saw the crack mid-afternoon trade. And you're right, in the larger picture, 1.5% is not the biggest thing in a market that deep. But just the intraday for a second, and then the advanced decline ratio to give you a sense of what we're seeing in trade this afternoon. And intraday for the Nifty was what we'll start with. See the kind of consistent downward bias that we're seeing on the Nifty below the 25,900 mark, now closing in on the lower side on the 25,800 mark. And the next 1 hour becomes very, very important to see if there's any support coming in. The Bank Nifty intraday, because the Bank Nifty has been the hardest hit of all, and that's really where the pain is being seen, very close to the day's low on the Bank Nifty as well. Let's pull up the advanced decline ratio just to give you a sense of the market breadth, and it is not looking very good, to be honest. Almost 1:2 in terms of the ratio, and declines there much ahead. Is this because of nervousness, etc.? We'll of course have to wait and see. Let's look at specific stocks in the interim and see really what is getting hit the most, and it's all about autos. So two companies that I've picked up, of course, Niraj spoke about Hero Moto as well on the Nifty, but Hero Moto, TVS, the worst hit in the auto space, the two-wheelers, because remember, it's all about the numbers which are coming in, and a concern that you're going to see a softer than expected festive period, plus September has also been soft. I'll add Ola Electric to this, because Ola Electric's Vahan data, which is the actual registrations for September, has not been great. It has shown a fall in sales. So you're seeing Ola Electric also down 2% along with Hero and TVS. Some volume buzzers, of course, that you are seeing in the market today. Vijay Diagnostics, Saregama is the other one, which is seeing good volumes. No specific reasons, but yeah, high volume trades on some of these stocks. Otherwise, the only thing that is really working today is metals. NMDC, JSW Steel, JSPL are some of those which have seen a spot of green. The big focus is the SEBI board meet. Will we hear something possibly after 5 o'clock is what we're seeing. Recovery there on Angel One and BSE. I want to pull up IFL Finance as well and see what's happening there. IFL Finance down in the red. But, you know, that's what the street is divided on right now. Will you see more of sort of an advisory kind of note coming in from the SEBI after the board meet, or very strict regulations to clamp down on F&O? And that's really what the street is not sure about. I think that's one big cloud on the horizon, Niraj.
Yeah, let's see how the evening shapes up. Answers only post-market. But what to do, therefore, in a scenario like that? Hemen Kapadia, Senior VP Institutional Equity at KR Choksi Securities, on the technicals. Hemen, good having you. Thanks so much for taking the time out and being with us. So let's start off with the big Nifty call. What is it that you would do on the Nifty currently, Hemen?
A very good afternoon to you, Niraj. Thank you for having me on the show. So it's a pleasure. Excuse me. Frankly speaking, sorry, Newton's laws of gravity needed to be respected. It was going up one way, Niraj. Somehow we had to take a breather, and that's happened for whether it's the Japanese Prime Minister or the SEBI meeting or whatever. Market needed an excuse to cool off, and that's happened. Okay, coming back to your main question, what would I do now? I don't think it's a short. The setup seems fine. So I would wait for some clarity before going long. Currently, the Bank Nifty looks a shade better than the Nifty. It's too late to sell, too early to buy, but it's definitely not a sell at this level. If it consolidates, corrects, or maybe takes some more time, I would look for levels where I can take a contra buy call. I wouldn't like to sell over here. Plus, there's a weekly holiday in Niraj on Wednesday, so I wouldn't want to go into a holiday with a position. So I would stay away, but it's not a short here.
So, okay, you're saying that a contra call on the Nifty, what about the Bank Nifty and what about any specific stocks? Is there anything that you would look to go bottom fishing and buy right now, Himen?
Okay, maybe it's a bit late in the day, Tamanna, but metals still have a long way to go. So I believe this is something like an Hindalco is a buy on declines. Hindustan Copper is nice, but half of the time on the exchange, it spends getting in the ban list for whatever reason. So that is something I would avoid. But Hindalco on a decline, yes, it's given a multi-month breakout, so that looks interesting. As far as Nifty is concerned, like I said, shade weaker. But Bank Nifty closer to 50. Okay, we are at 53, closer to 50 to 500, and maybe a couple of days down the line, I would like to go contra long, Tamanna, and couple of stocks which look good in a wobbly market. One is buy call on Chambal Fertilizers. It's been moving sideways for around 15 weeks now, setting the stage for an up move. It might obviously not happen this week. Buy on Chambal at 525, stop loss 505, target 565, above 55-day exponential moving average. Oscillators have given a crossover buy. Weekly picture is improving, Tamanna. So that's Chambal. Second one is IOC. IOC is something which I've been liking, and though it's a trading call, it can be some more also. What can buy IOC at 180, stop loss 170, target 200. We've spent 7 months of consolidation, Tamanna. Setup is a very clear bullish pattern. This stock is going to go to 220. Looks very interesting. Yeah, it's gone up for some 8 trading sessions, 7 trading sessions in a row. Might be a small cool off coming in, but yeah. So IOC and Chambal in that order both look like defying a wobbly market.
Okay, so a lot of specific stocks. I was just going to come to you on the Bank Nifty once more, Himen, because you are going to have, because of the market holiday in the middle of the week, you're going to have Bank Nifty expiry as well coming in. What is the call that you would take, seeing the weakness right now?
Like I said, I wouldn't like to short it, but if I were to stick my neck, I'd use last hour's low as a stop loss to go long. A small bounces in the offing, Tamanna. Once again, this is not advice. You have those wrestling matches on TV where the advisors don't do this at home. So this is not for our viewers, but it is just a view that it's oversold on the hourly charts. A bounce is a possibility. It's absolute. I mean, this for the Bank Nifty is absolutely not a short. So keeping last hour's low as a stop loss, we play for a small bounce. Once again, it's risky. There are no signs of a reversal. It's just an oversold situation, Tamanna.
Yeah, 1.5% though for the Nifty Bank too. I think most of those have done, but I think very well pointed out that metal seems to be that focus, and that's the theme that we've chosen for the day. Because in a market like this, for the index to outperform means it's a serious outperformer. Mihika joins in with details and some math around some of these metal names and how they might benefit as a result of the moves that have happened due to the China measures, I presume, Mihika.
Yeah. Good afternoon, Niraj. You're absolutely right. We have a host of key commentary and measures announced by the Chinese steel government. Let's just talk about how the Nifty metal did buzz in trade today. It reached an intraday high of 1.98% at 10,263.65 with top gainers including to the likes of NMDC, Welspun Corp, APL, Apollo Tubes, JSW Steel, as well as Nalco. Now, when we talk about why metal companies are gaining steam, well, the Chinese government has announced measures mainly to support the property market. Now, China's real estate sector has been in a downtrend since 2021, as many project developers did default on their payments, and that led to higher debt. Now, 3 Chinese megacities have curbed the home buying regulations in their respective cities. This includes Zhangjiang, Shanghai, and Shenzhen. Now, the potential home buyers will no longer be required to have the qualification for home purchases reviewed. The down payment ratios for the first and second homes have been reduced to 15% and 20% respectively in the cities of Shanghai as well as Shenzhen. And the Beijing Central Bank has asked financial institutions to lower the mortgage rates. What all of this does is makes consumers allows them to buy their homes in a more easier manner. Now, when you talk about why a stronger real estate market is a catalyst for the metal sector, well, a thriving market will help improve steel and thereby iron ore demand. It's key to know that iron ore is a key raw material in the steel making process. Healthy real estate market will drive construction activity and therefore lead to better demand for both these commodities, and this could help drive prices higher, this is the main reason why prices of iron ore and steel have been under pressure. Let's talk about NMDC, which has been the top gainer today. The prices of the stock rose up as iron ore futures today rose to an intraday high of 10.85%, and they've been up 24% in the past week. Now, higher prices benefit NMDC because it's a miner of iron ore. Now, the company makes around 1,800 to 1,900 rupees per ton in terms of EBITDA at an iron ore price of $90. Currently, prices are trading around $110, $111 per ton for iron ore prices. So there could be an uptick in their EBITDA per ton. When you talk about lastly the steel players, well, iron ore and steel prices usually move in tandem, and the China SRC prices did open higher today, gains about 0.14% right now, and better steel prices are positive for the likes of JSW Steel, Tata Steel and JSPL because it increases their realizations, and this comes amid a scenario when one of their key raw material, which is coal, has been seeing a downturn in prices, so this is even better for their realizations.
Okay, so you have, of course, a focus on iron ore today, NMDC definitely, but let's also welcome Siddharth Khemka, Head of Research, Business and Development at Motilal Oswal Financial Services on the show today. Siddharth, very good afternoon, great to speak with you. Just going to get a sort of mood check from you on what is making the markets nervous today. Is it what's happening in Japan? Global cues apart from that weren't that negative, or is this just waiting to see what happens this evening after the SEBI board meet ends?
Yeah, hi, good afternoon. So I think there are several factors which are affecting markets today. Definitely, Japan is on top of the mind with the risk of interest rate going upwards there. The return of the yen carry trade unwinding could lead to more outflows from emerging markets, and that could be a cause of concern. The weekend, we had seen the Middle East issues with more tensions flaring up between Israel and Hezbollah. So I think there again that also led to some cautiousness and markets touching new highs. Friday we saw some profit booking, and today I think that took a more precedent over the investors' mind to book profits in this current juncture and wait on the sidelines. I think the SEBI meeting is not that big a concern. Especially it could be mostly for some of the capital market stocks from the exchanges or some of the broking stocks, but it cannot have a much bigger impact to the overall economy or the market. So I'm not concerned on that front to that extent right now, but looks like more of the FI selling and some profit booking from the domestic front that is leading to the market coming down today.
Okay, so profit booking and FII selling could be the situation. Interesting point there, Siddharth, where you're thinking that it's not going to impact too much. I'll ask you one follow-up, because so many now rumors swirling in the market. We'll of course wait for what SEBI actually says, because that's what's important. But the concern that if there is any kind of restriction, if there's any kind of criteria on who can invest, or the number of expiries per week curtailed, that it will have a huge hit to volumes overall. Do you reckon that that is a real fear?
So yes, if the number of expiries, or if the number of instruments that are expiring on a weekly basis, that comes down, yes, there will be an impact on volume in the near term. And a lot of these speculative volumes that are rising in the market, that could go away. There are other rumors about the minimum net worth requirement and a lot of other stuff. I think that will only strengthen the overall structure of Indian markets. And going forward, when we will have more investors coming in, more traders coming into the fold, these structures and these restrictions will only create a stronger market for the larger participation of people. So in the near term, yes, there will be an impact. But I think there have been a lot of other measurements over the last few years. But the number of investors, traders have only gone up, and the volumes have always recovered in the long term.
Volume, yeah, that's true, and that's why you're seeing look at the BSE stock today, look at Angel One, for example, pull up a clutch of those brokerage stocks. JM Financial is completely buzzing today, Motilal Oswal, IIFL Securities, even IIFL Securities now in the green. On the charts, Himen, any of these that you're liking, the capital market play? BSE anyway was in its own trajectory because of the NSE IPO, but otherwise?
Yes, I think absolutely, Tamanna. It was on its own trajectory. It was in a world of its own. So, frankly speaking, I think Motilal Oswal looks interesting. We are in an established longer-term uptrend, Tamanna. So that's not the worry. It's been consolidating over here for the last 5 weeks. The longer-term setup seems quite sanguine. So I would say closer to around 720. I think one can take a bullish call on Motilal Oswal. It looks quite positive the way I see it.
Speaking of Motilal Oswal, I mean, I heard Siddharth talk about how he doesn't believe that some of the AMC or maybe the broking stocks or markets at large, actually not broking stocks, but markets at large would come under pressure. But the SEBI board meet is underway. And let's try and get a perspective of somebody who may look at it maybe slightly differently, maybe not. Vineet Bulinchkar, Head of Research at Ventura Securities, with us on the show. Vineet, the slew of measures anticipated, is there something that makes you nervous? Do you reckon that this could be the reason the market is nervous, or is it not so?
So I believe that there is a knee-jerk reaction because, it is going to impact volumes in the short run. However, if you go to see empirical evidence, if you draw from the PMS, quantum increase from the minimum 25 lakhs to 50 lakhs, the market has only grown. Earlier also, there have been points in time when the size of the contracts has been increased and we have seen participation go up. So I think these measures which the SEBI is getting into the market, it is to protect the retail investor. And who do not understand the wild fluctuations where they've all been losing money. So only the serious players will be left into the market because, if the lot sizes are going to go up from, say, 5 lakhs to 15 lakhs, and then probably after 6 months, even take it up to 25 lakhs, as it has been suggested in some of the recommendations, it is going to crowd out some of the smaller players. And with the STT being increased on short-term trading, it's going to be up almost 60%. So that is going to create a kind of a speed breaker for the retail investors because, like it or not, you have to pay tax, right? So I think these things, and along with increasing margins on the day prior to expiry, and restricting expiry to 1 day, I think these are good measures because you are now making it a serious business and not a casino effect like you see happening currently. So good measures, but I think short-term volumes will come back up, but it will be more of a mature market then.
Vineet, hi, good afternoon. Tamanna here. What is the best case scenario and worst case scenario out of this board meet? Because there's one sort of thought that maybe there will be a lot of things said about, let's have investor education, awareness, etc., but nothing majorly done to clamp the kind of volumes we're seeing now. Now, is that, in your view, perhaps the best case scenario? What is the worst and best that you could see today?
So, what I think is that the measures that are introduced on option trading, that will have a slightly short-term negative skew on the markets immediately, but that will get quickly recovered because the trend is so strong in the markets.
Okay, interesting. Okay, we need any specific measures. One last question from mine. Any specific measures which may not have a market-wide impact, but individual pockets might get hurt if indeed there is tinkering with the number of expiries, then do brokerage stocks come under pressure, anything like that?
So I think, the resilience of the market and the markets as a money-making machine the lucre is too strong to ignore. So people will find ways around that. And eventually the people will adjust to new realities. And I don't see the brokerage stocks getting impacted too much.
Okay, Vineet, we'll leave it at that. Thanks so much for taking the time out and being with us and giving us your thoughts. Just before we get to the key brokerage call of the day, there was a news flash that came up on the screen just a minute ago. And Siddharth Khemka, I want your view on the same. Indian Oil rights issue of 22,000 crores has been withdrawn because the government is not going to participate in the rights issue, and if the 51% shareholder doesn't participate, how will the rights issue anyways go through? But is this a dampener for the stock?
I missed out, Niraj. What exactly is the reason for the government to withdraw?
Saying that there is no capital allocated for the proposed investment in the rights issue, and thereby the company has withdrawn the 22,000 crore rights issue.
So I think yes, in terms of sentiments, it can definitely become a negative. But if you look at all the three OMCs, Indian Oil has the best cash flow generation, and I think to that extent, some of the future projects, at least the near-term projects, may not get impacted. But in the long term, if they need to get into some of these projects, some of alternate fuels, that would definitely require a lot of investment and capital, and they would require support from the government side. So if government is not provided for any capital right now, I think that is a good time for them to start looking at it. And at least on the positive side, the OMCs, the free pricing and the cash flows that they are able to generate, that will support them in the near term.
Okay. All right. Brokerage notes, and the big brokerage note of the day. Let's talk about NTPC today, which hit a life high after both Jefferies and Morgan Stanley made a bull case for the stock. Mihika is back with more details on this. Yes, Mihika, what is so exciting as far as NTPC is concerned for Jefferies and MS?
NTPC has been in focus today. We had two notes come out. First up is Morgan Stanley, which has maintained an overweight weighting at a target price of 496, which implies a 14% upside to the previous close of the stock. In the base case, it values NTPC's renewable energy portfolio at 47,700 crores, and the bull case values it at 1.3 lakh crores. Morgan Stanley has also noted some of the key details of NTPC Green, which is NTPC's renewable energy arm that recently filed for its DRHP. Now, the IPO proceeds will be used for debt repayment and general corporate purposes. 2.92 gigawatts of operational capacities under the company's portfolio, and NTPC Green also has 10.98 gigawatts of capacity in the pipeline. The company will also be installing batteries in its hybrid contracts, and its market share currently stands at 7% as of FY24, which has come down over the past 3 years. However, its bid-win ratio stands at 38.9% in FY24. We also had Jefferies that's maintained its buy rating on NTPC with a 485 rupees target, which is a 12% upside. And the brokerage has said that NTPC Green's IPO can potentially add 5 to 11% upside for NTPC, and NTPC's green capacity is set to grow 4.6 times by FY27, FY28.
Okay, Siddharth Khemka, are you excited about NTPC and because of NTPC Green? I mean, today somehow the IPO buzz is kind of missing and feels bad for Manba Finance. which seem to have its listing today. But NTPC is exciting to you?
Yeah, definitely. I think if you look at NTPC and some of the other power utilities, they have taken a much better pivot towards the renewable energy space. And over the last few years, we have seen a strong re-rating in NTPC, which we believe is largely attributable to the strong growing RE business, and it's on path for its IPO over the next couple of weeks. We believe that could be a value unlocking process. But also, if you look at the overall power demand in India has been pretty strong, and a record power demand that has continued with the economic growth expected going forward. That should also continue to yield a good, because it's an annuity business model, a utility model. We believe that could continue to do well. So we definitely are excited about NTPC. We like the stock, and we feel positive about the IPO of the NTPC Green as well.
NTPC in focus. Hemin, a quick word on NTPC.
Looks good. All-time high, no known resistance levels. Will be it's a buy on decline.
Decline. So not right now.
No.
Okay. NTPC is a buy on decline. We'll take a very short break. We come back with top BTST ideas and top trades for this afternoon. it looks like looking like a tough Monday afternoon in the markets. About half hour left to go for trade, and one sector which is really taking the heat is auto. Now, a couple of reasons for that. Remember, auto numbers for the last month will be out tomorrow. We'll get a preview on that with Puneet, who's joining us now. He tracks the sector. But Puneet, there's another reason why auto is down in the doldrums, and this is because Volkswagen has cut guidance. Explain why this has hit sentiments as far as Indian auto companies are concerned.
Well, thanks for that. So definitely a negative for auto component and ancillary companies. But this has also come after BMW cut its guidance earlier a couple of weeks ago. And now that's followed by Volkswagen as well. Now, the company is expecting to deliver roughly around 9 million vehicles. This is lower from the previous projection of roughly about 9.5 million that they were expecting to deliver in this year. Now, it's also going to expect to impact revenues also in this particular year. They're expecting for revenues to fall by roughly about a couple of basis points to come in at roughly 320 million euros versus expectation of a 5% increase for FY24. Now, when you look at, roughly about the operating margins are going to come down by roughly about 140 basis points to come in at 5.6% versus earlier expectation of 6.5 to 7% range for operating margins. And they've also said that, like what BMW had mentioned, that operating margins are going to be affected and vehicle sales are going to be lower. Now, we just thought to look at certain companies that will be also in the Indian auto component space, that will be negatively impacted by this. And the first one is, of course, Samavardhan Motherson. Now, the company reported 1 lakh crores of revenues for FY24. 9% of that was from Volkswagen and 9% from that was roughly about for Audi. So both of them roughly 18%. So 15 to 16,000 crores of revenue is impacted by this particular move. And when we add 5% of BMW as well, that makes around 20 to 21% of the companies they cater to that have cut guidance in this fiscal year. The other company that we want to look at is Endurance Tech. Now, they of course focus at Europe, and according to Bloomberg, they have a supply chain tool that we use. Roughly revenue in FY24 was 695 crores that Endurance got from someone like a Volkswagen Group. The number for SEAT is roughly about 504 odd crores, and that's also roughly about 4% of their total sales. For Endurance, it was about 6.5%. And the last company, Suprajit Engineering, they got about 95 crores of revenue from servicing all of the Volkswagen Group brands, and that was about 3.5 to 4% from just a single client. So this could be an impact for these auto ancillary companies, and we can see that reaction in the stock price today as well. Back to you.
Okay, we'll come to you in just a second, Puneet, about the guidance that we are seeing in terms of sales numbers. And that is the second factor which is bothering the market. But Himain, just on some of those auto anch names, of course, all of Nifty Auto taking a beating, over 2% down. But on some of those auto anch names, anything that you'd want to pick up right now? Would you look at some of the two-wheelers at all? You're on mute, Himain.
Sorry, my bad. Auto, yes, I think two-wheelers, I would prefer to go with the 4-wheeler Maruti. Maruti has broken out about 13,060 after some 18 weeks of a consolidation, Tamanna. And now, evidently, it's cooling off because the move from 12.2 to 13.5 has sort of fizzled out. So at 13,060, I would take a contra buy call. Rounding bottom indicators buy, long time consolidation, everything looks good. Hunky dory, we are in a longer term uptrend. So instead of a two-wheeler, Tamanna, I think I would like to go for Maruti on a decline at around 13,060.
Okay, Maruti is the pick, and I'm going to come to Siddharth Kemka on his view on autos. But before that, Puneet is joining us with the preview for what the September sales numbers are looking like. And Puneet, it's not too pretty.
Well, yeah, definitely. And there were two key factors that we should watch out for in this particular month. One was the Shraddh Paksh. They started from September 17th versus 29th September that started in the same time last year. So that was one of the negative impacts, but that has somewhat been hidden by, the inventory buildup that the companies have done 1 month before the festive season starts. Now, effectively in this particular month, there was some positive impact of Onam as well as Ganesh Chaturthi, but, brokerages have made that the sales haven't been impacted as positively recovery as expected, especially in Maharashtra for the likes of Mahindra as well as others. But let's look at the two-wheeler makers specifically first. The legacy makers TVS and Bajaj are going to have a strong sales in this particular month as well, 10 to 12% growth on a year-on-year basis, while on a month-on-month basis also they are showing a 10% growth. The same trend can be seen in TVS as well. They are showing a strong growth of 13% on a month-on-month basis, and that's also compared to a 10% growth on a year-on-year basis. But the star or something that you should watch out for is Hero MotoCorp numbers. They have been subdued roughly around 5 to 6% growth each month over the last 5 months, but this time they're going to show a strong growth on 8% on a year-on-year basis, as well as 13% on a month-on-month basis, getting close to the 6 lakh unit mark. Now, that trend is not visible something in like Eicher Motors. They've had a very dismal year of FY25, and that trend is continuing. Despite seeing a 7% growth on a month-on-month basis, they are lagging all their peers. But in passenger vehicle, very interesting trend. Mahindra is expected to report a mid-single-digit growth, 4 to 5%. Month-on-month also is similar, while Maruti is also going to be a very subdued month, nothing to take notice of. But the most interesting one is going to be Tata Motors. Strong growth on a year-on-year as well as on a month-on-month basis, and despite sales having been very tepid for them in the first 5 months, this is the first month of meaningful growth despite the inventory picture as well. Now, when you look at the commercial vehicle makers, it's not been a very pretty picture, and that's visible for Ashok Leyland. On a month-on-month basis, very strong recovery. A similar trend will be visible in Tata Motors, and that's something to watch out for. Escorts, on the other hand, is expecting a 10% month-on-month growth. And finally, someone like a Tata Motors, roughly 26% growth, similar to Ashok Leyland. Just to finish this off with the tractor makers, that's been, one of the most eyeballing numbers. Month-on-month recovery for someone like Escorts is 100%, close to 100%. And that trend is also visible in Mahindra and Mahindra. So while on a year-on-year basis, sales have been lower, it's a very strong recovery from the previous month in this particular one. So overall, watch out for all these players because the action is there in each one of them. Inventory build-up is something that's going to be a key trend in this particular month. Back to you.
Okay, so we might see weakness continue tomorrow as well. Siddharth Khemka, are you concerned about the kind of sales numbers we might see in September, or is this more about certain seasons where people don't come up and buy, etc.?
Yeah, Tamanna, actually, it's difficult times for the auto sector. Demand is yet to pick up. The onset of festivities have failed to spark the demand. However, our channel check suggests that the dealers remain optimistic for the upcoming Navratras as well as the Diwali season. In this last month, yes, there has been the full month of the full impact of Shraddh period is in 1 month compared to last year where it was divided between September and October. So yes, there is some bit of base effect there. And between the segments, if you look at two-wheelers are comparatively more resilient with a lesser fall compared to the passenger vehicles, CVs and tractors where the Y-on-Y fall is much sharper. Nonetheless, two-wheelers, the stocks have seen a run-up. And while we continue to maintain a positive view, valuations leave limited room for upside. And in this scenario, what we are liking again is a Maruti where valuations are comfortable, and we are seeing that it's a good play on the rural recovery, especially on its some of its economic segment cars doing well. We are also liking Mahindra and Mahindra given its good, healthy demand momentum both in the SUVs as well as in the tractors for FY25. So fingers crossed for the upcoming festive season. Inventory buildup is happening. A lot of dealers and companies are offering schemes, offers, discounts to push that demand, and hopefully that should provide that push to the customers to start buying on the automotive segment.
So far, Siddharth, just to take off from that, you're saying Maruti is still looking okay, but two-wheelers is what was favored. Today, TVS and Hero getting the brunt. Some notes out there also with concerns about the kind of discounts being offered. We're seeing that with Ola Electric as well. Do you think that the focus is now shifting to passenger vehicles for you, or two-wheelers remain the favorites?
Yeah, so gradually with this kind of environment, this focus is shifting towards passenger vehicles. We have been liking the two-wheelers for a long time now, and with with the current situation and with the discount offers, we have seen in the past how Tata Motors, Mahindras, they have also offered huge discounts in the previous 2 months to push demand. And now that is the same case we are seeing with some of the two-wheelers, Hero Moto offering ₹1,000 discount in the Shraddh period. Thus goes on to show that demand is not there, and hence the focus shifting towards some of the other segments where both on a Y-on-Y basis as well as on a month-on-month basis, the growth is looking much better in the passenger vehicle segment as well as in the tractor segment.
Okay, some stocks which are now starting to show a bit of a spike, you have to bring them up. So Archean Chemicals, Ireda, India Cements, if you just look at the intradays of some of these, the stocks have just started to inch up a little bit from the levels that they are trading at. So pull up the intradays of each of these and you will see what I'm talking about. There are moves there. Archean Chemicals, look at that spike there. Similarly for Ireda, similarly for Hitachi Energy and Cello World as well. The intradays of each of these are looking very, very strong. In fact, for Hitachi Energy, it's a really sharp up move, 8.5%, and trading at the high point of the day. As is Cello World, of course, with a 3.5% up move from the levels that it was trading at. I think there are some serious spikes. Pull up Cello World. Look at that. Some sharp spikes into some stocks in the session today. Hemen, any of these that look interesting for a trade?
Cello that you mentioned, Niraj, that is one which looks slightly interesting in the sense we've seen a decent reversal. The volumes I wish were more, but we still have 20 minutes left to go. And it's been almost 6 weeks, Niraj, for Cello World, and 925 is a breakout level. So I believe that it looks set to do that. So Cello is something which one can consider, and it's made a base, Niraj. So I think we have a defined range and a clear stop loss. So yeah, Cello is worth a long trade.
By the way, the indicative closing price, of course, if we already marked it, I'm sure, but if you can see it on your screen, that's roughly the levels at which the markets are likely to close. So keep that in mind as well. And anything fundamentally, I mean, just trying to understand, Siddharth Khemka, Cello World is a recent one. Motilal Oswal, I believe, came out with a note on that one as well. Are you constructive fundamentally on this one?
Yeah, Niraj. So definitely we are liking the stock. It's a long-term play on the consumer segment that they are getting into. Apart from the kitchenwares, they are also into the molded furniture segment, and all of which we believe gradually with the product penetration and the brand that they are having, the growth strategy that they are doing across segments should lead to a steady 20-25% earnings growth for the next few years. And for a brand like Cello, valuations still look comfortable, return ratios in excess of 25-26%. So definitely we like the stock. It's some of the niche consumer segments that are doing well, more of a bottoms up approach there. We have a buy rating and a target price of 1070.
Yeah, clearly, but it's done well for itself today. And interesting thoughts. Siddharth, thanks for that. You know, the other one is PB Fintech. When the share prices have recovered after a 14% fall last week, and CEO Yashish Daya, in a conversation with us, said that the company is planning an investment of over $100 million in that space, but it's a one-time investment, and it's an investment. They are not looking to run hospitals. Listen in.
It's an investment. It is not PB Fintech owning hospitals. The investment will be between $0 to $100 million. It's a one-time investment. There is no commitment to keep on investing into the future. This company XYZ will, in a good case scenario, prove this model works and then either do an IPO or go into a REIT infrastructure kind of arrangement. But it is not PB Fintech's job to make sure that the next phase of its growth is funded by PB Fintech. Right. So I think from PB Fintech shareholders' perspective, the total potential loss is the investment. Also, a bulk of this investment is going to real estate. I don't think real estate is going to go down to zero. Even if the venture fails, you will get something back out of it. So I'm just trying to really talk small here, but at some level, there's a lot of defensibility in XYZ's, cost infrastructure is largely real estate cost infrastructure.
So that interesting business getting punished for diversification, I presume. I'd asked him about whether the ROIs are comparable to the existing business, even if it's an investment. Didn't quite get the clear answer, but you would have followed this. Is PB Fintech giving an opportunity, or are there other internet businesses that you might like because of what they are doing or what they've announced?
So Niraj, I think market definitely needs a clarity in terms of the thought process of the management. Right now, it looks like a case of a capital misallocation. We saw that recently with the Ease My Trip management as well, getting into some of the unrelated businesses. So right now, I would tend to view that this would remain negative until the market sees a proof of concept that whether this is a business which adds value to the core business. Otherwise, it's a unnecessary or not related, unrelated diversification, which is only to some extent, you can say, capital misallocation from a company which is an internet company. We have seen some of these previous concerns in, for example, Zomato taking over Blinkit, but later on when the acquisition proved positive, it's the same Blinkit which is providing that upside to the core business. But as I again said, it is very difficult to make a guess right now whether this model will work or not. This is something that the management is trying. So for now, we'll stay away from such kind of businesses.
Okay, Heme, in that entire space, let's look at PB Fintech. Let's look at Zomato, let's look at delivery. Some of these buzzing also because of the Swiggy IPO, but today all of them having a bit of a down day. Are you seeing an upside in any of these counters that you'd want to look at, or you'd stay away?
I think you mentioned PB Fintech, Tamanna. You also mentioned Zomato.
Yes,
and
delivery. Correct.
Yeah. Out of these three, if you would pick and choose, PB Fintech has entered an intermediate correction. So currently, I'd stay away for the time being. From a longer term point of view, Zomato is good. Seems to be in a shorter term distribution. Delivery is something which hasn't done much, but is promising a lot. It's spent a year doing nothing, Tamanna. Nothing much to lose. Setup is slowly improving. Above 455, I think I'd have more conviction. But yeah, from all the three that you mentioned, I'd pick delivery, but it's not a very shorter term call. It's probably a 9-month sort of a call. Yeah, delivery looks promising.
Okay, so what is a shorter term call? Hemane, what is the BTST call for tomorrow or STBT?
Well, I would have an STBT on something like a Bajaj Finance, but that would be sacrilege, shorting Bajaj stock. But anyways, I have a BTST on Balkrishna or Canfin Homes. Yeah, a BTST on Canfin Homes, Tamanna.
But why is it sacrilege? If it's your view, why not, Hemane? Don't do it halfway now. Chalo, now you've talked about Bajaj Finance, now tell us what to do.
Well, I had to tempt you into it, Tamanna. But the thing is, normally these fundamentally very strong stocks don't decline the amount and the quantum that you would normally anticipate. See, Bajaj Finance is 11,000 rupee stock. It's on the cusp of breaking out from a 4-year consolidation pattern. So then trying to play a minor move like this is cutting it to find there's resistance at 7,800. That's why it's given a downward bar reversal today. So it's a very sort of a short-term call. Once again, like I said, fundamentally good stocks don't actually go down that much. So that's why I said it looks weak. A downward bar reversal is obviously a weak formation, Tamanna, and the hourly indicators have shown weakness. But yeah, it's a very short-term view. So a BTST on Canfin Homes, Tamanna.
A BTST on Canfin Homes is the top call. So that, in terms of where you could see some of the recovery coming in, if at all, tomorrow, would you reckon auto and IT, some of the ones which have been most badgered today are good candidates for this, or would you look at, say, the bank Nifty?
Tamanna, I would look at some of these battered names. IT is something that we are liking now. After the Accenture numbers, we are expecting that the Q2 revenue growth for the overall IT sector could be decent. We are seeing client spending behavior showing positive trends, indicating the return of or the potential return of modernization discretionary spending in some of the pockets. And within the tier 1 players, we are liking HCL Tech, given its strong capabilities in data engineering, ERD, ERP modernization, making it well suited for the pre-Gen AI kind of spending. So overall, we are liking HCL Tech, which is a preferred pick within the tier 1 IT space. We have a target price of 2,200, and we are expecting good numbers. Margins are likely to see an increase of about 30 basis points on a Q-on-Q basis. And we also expect HCL Tech to retain its FY25 revenue growth guidance about 3 to 5%.
Okay, just a few factors to watch from tomorrow. Of course, this is the last day of September, but October 1st becomes interesting from a lot of perspective in terms of the market. I mean, of course, whatever happens with SEBI board meet happens or doesn't happen, but nevertheless, remember, you're going to have a hike in securities transaction tax from October 1st. NSE and BSE have revised those transaction charges, and you're going to have new buyback taxation. All those three come in. The STT revision was announced in the budget from 1st October, so that goes through. The transaction charges have already started happening. BSE revised it today, and the stock has been reacting positively to it, and the new buyback taxation also comes. So maybe you will not see too much promoter activity after October 1st. So these are some of the factors to keep in mind. But let's talk about one more sector which is really feeling the heat, and I think that is real estate. Let's pull up a Phoenix Mills and see what it's doing. That entire pack today has been weak. In fact, Phoenix Mills, I would say a bit of recovery there. Macrotech, the biggest loser at this point, nearly 5% down. Apart from a DLF and a Sobha. But an Oberoi has been pretty neutral so far. Hemant, any of these that you are looking at on the realty side?
I think positionally, Tamanna, DLF is looking good because technically it's formed a rounding bottom, Tamanna, which is a bullish formation. About 940, it should do better, but yeah, it's had a decent consolidation. We spent 3 and 3, 6, 7, almost 8-month consolidating, Tamanna, in a bull market. So yeah, DLF looks, I would say DLF looks positive.
Okay, well, that's one view. By the way, some stocks that are standing out today, I mean, brokerage names, not too bad. JM Financial is up 5.5 now. The other one is, non-broking. I mean, Edelweiss too, by the way, is up about, though Edelweiss is not a broker technically anymore, but 1.33% higher. But the other one is OMCs and HPCL in particular. Why IOC had that news. Look at HPCL. It's had a fairly decent afternoon, you have to admit, 0.5% higher, and BPCL too. So OMCs are kind of withstanding some bit of that selling pressure. So not a bad one, really, from that perspective. Okay, but global cues, of course, continue to create jitters for Indian markets. And possibly will do so for the next 6 to 9 months. In fact, there's a chance of zero returns from other markets. That's what EM Capital CEO Jeetu Punjabi's assessment is for the markets in the near term. Listen in.
So, if you look back at the last 18 months, we've had a really good 18 months. We've seen liquidity turn positively. We've seen a lot of countries do really well, and markets have been raging. I think we're at an inflection point where this is about to change, right? So we've been in a high return, low volatility market. I think that is just reversed. The next 6 to 9 months, we're going to be in a low return, high volatility market. If you ask me, put a gun to my head and say, what do I think markets do globally next 6 to 9 months? My best guess, zero return, probably plus to minus 5. With huge volatility. Second dimension of the market that's changed is we've been in a top-down market. So like in places like India, you've had themes like railways and defense and a lot of other, short financials, for example. I think the market moves to a bottom-up market. Within the environment, within a sector, you'll have 5 companies that do well and 3 that don't. And you're in cherry-picking zone. You've got to go and pick the right company. You've got to make sure the company does it right, and just a top-down call is going to be much tougher to make. So I think this is really what's changed, and you got to change the game where the market changes.
Okay, well, that's Jeetu's view, and of course, constructive on banks more importantly, so that's to be kept in mind. Siddharth Kemka, before we thank you, one fundamental idea that you are comfortable recommending to your neighbor, let's say, if the neighbor is coming and asking you, कि सिद्धार्थ पैसे किस में डालें? Let's say for the next 6 to 9 months, assuming that the markets could be choppy.
Yeah. So I think it's a stock which is related to the market. It's CAMS, and mainly because its focus is on the MF business, where we are seeing consistently increasing participation. The monthly SIP numbers are on a record high, and the company is now also focusing on the non-MF business to boost its revenue contribution by 20%. It's a cash generative business. And in kind of the volatility that we are seeing in the market, we would expect more people to shift from direct equity to mutual fund, which is a much better route for retail investors, and thus leading to an incremental growth for its core business. So I think structurally tailwinds in the MF industry should aid CAMS in its core revenue, while the focus on non-MF business, which is only expected to grow with the investments in alternates like PMSS, AIFs, insurance, which will only lead to higher contribution over the next few years. So a consistent, steady 20-22% kind of growth expected next few years. Cash-rich company, good dividend yield. So I think that is a company where you can recommend to anybody for the next few years in this volatile environment.
Siddharth, your smile when Niraj said that tells me how many times you hear this from your neighbors. Just a guess over there. But thank you as always for joining us today. And as we wind down what is definitely a painful day, the question remains whether we are going to keep seeing that trend coming in. So I just want to ask you, Hemant, in the last few minutes, do you see metals as an up move? Because if one thing is clear from the whole China story, that they are going to keep hammering in on every move to try and revive consumption, and metals is going to be a direct beneficiary. What from that space do you think is worth a bet? Would you look at a JSW Steel, for example?
JSW Steel is normally at the head of all metal moves. Ever since Tisco became 1 rupee paid up, things haven't been the same, technically speaking though. So JSW Steel leads the entire metal pack. Looks very nice, absolutely nothing to worry. It's in an uptrend on all time frames, Tamanna, daily chart, weekly chart, monthly chart. So no rocket science, it's going to go up further. It's where the Hindalcos and the Vedantas, or maybe even the Tata Steels, where we see more opportunity, even a sale for that matter, Tamanna. So they're technically cheaper. Technically in the sense, so I mean to say, the risk-reward ratio more is in favor, because JSW is at an all-time high. Now the all-time high, at least the 1 year high for sale is around 174, Tamanna. So I believe even something like an NMDC. So that is where I would, and Hindustan Copper remains good, but like I said, it remains in an FNO band. So some of the metal stocks, and the way I see it, it's going to be a couple of months. It's not going to just run out of steam in a jiffy, Tamanna.
Okay, so it's going to be a couple of months since you're going to see NMDC. Would you look at a Vedanta positively in that context, Hemant?
Without a doubt, it's a buy on every decline. Vedanta and Hindalco must buy on every decline.
Vedanta, Hindalco must buy on every decline. Okay, at least we're ending off on a bullish note at a time when you are seeing a bit of a slump in the market. Thank you so much, Hemant, for speaking with us. Pleasure as always to have you on the show. And as we wrap down, Niraj, I would reckon that you're definitely seeing some recovery, maybe from the lowest levels. Whether it persists and you see a bit of a bounce back tomorrow is the big question.
Might be dependent on maybe not as much what US does, but what SEBI board meet announces, Tamanna. Should be interesting. But yeah, 1.5% still lower. Banks have sulked today, 1.58% lower, and now are ending lower than the Nifty, which is a bit of a worry. Mid caps and small caps have fared a tad bit better. Look at that. The Nifty mid cap index 0.25%, and the small cap index marginally in the green. So flattish performance versus this pain here, which is a great thing. So let's just pull up the heat map and show you what the large caps have done. I'll quickly mark that. There's a lot of red very little green. It is metals which have kind of held their own today with a little bit of contribution from an LTI Mindtree and a Britannia. The names like Hero MotoCorp, Axis, RIL are the ones which have really put pressure. But Tamanna, you have to note that we noted that on the points contribution list, while RIL is top draw, ICICI Bank and HDFC not far behind.
Yeah, but an RIL down 3% is really adding to the pain one way or the other, and then you add all of your banks as well as your autos, and which is where you're seeing the pain. Let's pull up the sectoral heat map for a second as well and show you how deep that cut is. It's only metals which was doing okay, and how much can one metal index do? So 1% up on the metal index, but everything else, autos the deepest cut, finance, private banks, realty, PSU, all hurting. So a big chunk of the market today feeling the heat. Even Nifty Energy doing fairly badly. I'll pull up the advanced decline just for a second to show you the market breadth, and very mild improvement, I would say. I mean, a bit of a stretch to even call it an improvement, but this is a down day. There's no question that this is a down day, and you're seeing a fair amount of a dip on the Nifty from where we started. So room for improvement definitely, and room for a bounce back. I'll just pull up the top gainers and losers in the broader markets, the BSE 500, just to give you a sense of what kind of a mood we saw. And I mean, you have a mix of things over there. No one very, very clear trend coming in. On the upside, maybe an AstraZeneca was an outlier in the pharma space, which was doing fine, and JM Financial as well. This is a market which is waiting and watching. One, how does global factors pan out, whether it's China or Japan, and the other, what comes out of the SEBI board meet. So for all of those things, you need to stick with us here on NDTV Profit, because we're on top of the story of SEBI right through the evening. You'll know first from us what exactly the outcome is, and of course what the implications are. But for now, from Niraj, me and the team that put the show together, thank you so much for watching.